this is a pullback in a bearish trend, and this is a pullback in a bullish trend. But what if we look at it from a professional trader's perspective? In this video, we're going to talk about pullbacks, why you actually need to understand them, what a pullback really is, and what you can use it for in real trading. Section 1. Why understanding pullbacks actually matters. Before we talk about pullbacks, we need to understand why they matter in the first place. Knowing what a pullback is does not help you by itself. What matters is what a pullback allows you to identify. A pullback can be an entry model, but that is not what this video is about. In this video, we focus on pullbacks as context. Without understanding pullbacks, change of character has no real meaning, break of structure becomes unreliable, and trend direction turns into guesswork. Every trading day starts with one question: is today's market bullish or bearish? And that answer does not come from indicators or patterns. It comes from how price forms and reacts during pullbacks. Pullbacks are the foundation of market analysis. First, you identify the pullback. Next, you look for change of character and break of structure. Only after that do you define the market trend and order blocks. If this first step is wrong, everything that follows will be unreliable. Section 2. What a pullback actually is. Let us start with an uptrend. Imagine price is moving upward, and no candle moves below the low of the previous candle. The first candle that moves even just 0.1 pip below the low of the previous candle, whether it closes there or just touches it with its shadow, that is where the pullback occurs. It is the first sign that the market is pausing or correcting without breaking the overall uptrend. In continuation, price is still trending upward. Each new candle does not move below the low of the previous candle. Then one candle finally moves slightly below the prior low, even if it is only with a wick. That candle defines the pullback. Now, let us look at a downtrend. Price is moving downward, and no candle moves above the high of the previous candle. The first candle that moves even just 0.1 pip above the high of the previous candle, either with its body or just its shadow, that is the pullback in a downtrend. Again, it is a small pause or correction, but the main downtrend has not reversed yet. In continuation of the downtrend, candles do not break the highs of the previous candles. The first candle that breaks a prior high, even marginally, marks the pullback. Understanding this is crucial, because a pullback marks the moment the market reacts. It is the first signal you will use to identify change of character, break of structure, and eventually the market trend and order blocks. Section 3. What pullbacks are used for? Now that we know what a pullback is, let us see how it actually helps us in trading. Pullbacks allow us to identify highs and lows. From highs and lows, we find change of character and break of structure. From those, we identify the trend and order blocks. Finding highs and lows in an uptrend. Imagine price is in an uptrend and gives a pullback. The point where price started to move down and caused the pullback, that is the high. Later, if price breaks the previous high with a candle close, the point where price started that move becomes the new low. Finding highs and lows in a downtrend. In a downtrend, it is the opposite. The point where price started to move up and caused the pullback is the low. If price later breaks the previous low with a candle close, the point where price started that move becomes the new high. Now that we can identify highs and lows, we can spot change of character and break of structure. Break of structure in an uptrend happens when price moves from the previous low toward the new high and closes above it. Based on backtests, a candle close is required. The shadow alone is not enough. Change of character in a downtrend occurs when price breaks above the last high by even 0.1 pip. Based on backtests, a close is not required, although it provides stronger confirmation. The shadow alone is sufficient. For the opposite trend, the concept works the same way, just reversed. Section 4. Chart example. Now let us bring everything onto a chart so you can see it in action. In an uptrend example, price forms higher highs and higher lows, creating a clean structure. Price then gives a pullback, and the point where price started moving down is the high. Next, price breaks the previous high with a candle close. The point where price started that upward move becomes the new low. This is where break of structure occurs. Then price breaks below the last low. This marks change of character, the first signal that the trend may be reversing. In a downtrend example, price forms lower highs and lower lows. Price gives a pullback, and the point where price started moving up is the low. Next, price breaks the previous low with a candle close. That point becomes the new high, and this is where break of structure occurs. Then price moves above the last high with a candle close. This marks change of character, signaling a potential trend reversal. As price starts forming higher highs and higher lows, break of structure occurs when price closes above the previous high, confirming an uptrend. Key takeaways. Pullbacks mark where price reacts. Highs and lows are formed from pullbacks. Change of character signals the first sign of reversal. Break of structure confirms the trend. By following this method, you can systematically identify the market trend and spot order blocks in smart money concepts. In the next videos, we will go deeper into advanced concepts of change of character, break of structure, and market trend. If you want to understand how all of this connects in real trading, make sure you do not miss it. Subscribe for more smart money concepts content. And if this video helped you, do not forget to like the video.